Hello traders and traderettes, welcome to the Elite Traders University presentation of the Pip and Run Market Map. Now Pip and Run is a live trading webinar which I do several times each week, and I trade live in the markets. It's part of our education where I trade and you watch me trade and you look over my shoulder and be able to learn the Pip and Run system by doing. And so I analyze the markets in real time and you get to trade alongside with me. And so this is a special service for those people who are Xenia account holders. They have a Xenia trading account. So make sure that you get your Xenia accounts open and you go ahead and get those ready for our Pip and Run, the return of Pip and Run starting next week for Valentine's Day coming up this week. Very important week for all the sweethearts and things like that. In fact, we have a special gift for you for Valentine's Day. Let me go ahead and show you that special gift. So you'll be able to enroll in the Pip and Run Foundations course, the Foundations Workshop. It's going to be I'm going to extend. It's going to be a 4-day workshop, and you'll get the link to this in the mail. And what you're going to do is you're going to 4 days, each day a new lesson, foundations on the Pip and Run method, on how to trade the market successfully using the Pip and Run method. Now it's completely free. All you got to do is just sign up, and it's a free gift from me to you for Valentine's Day for the Pip and Run Nation to help you trade better. I hope you've been enjoying the free Pip and Run room and on the Facebook group. Now that's good. That's a special open house, and basically I just wanted to get people jazzed and energized, and to show them the kind of potential that they can make when they're working with me in this type of manner. Okay, like my inner circle, that if they've invested thousands of dollars to do it, I'm giving it away for free for you, and I hope you guys have been enjoying it. And this is going to continue on going to the 18th, so it's free. You don't have to pay a dime. There's no credit card. There's nothing here. Absolutely free to you, because I really appreciate you being on my list. I really appreciate you following me and trading and asking me questions, and seeing you successful is a really great thing of being able to pay it forward. So to give you even more gifts, because I really love you guys, I'm going to give you 4 classes. No sales thing, just classes to teach you how to tackle this $5.1 trillion market, to extract money out of the market. So when you get this link in your email, make sure you open your email, and then go ahead and so when you're going to press the video, it's going to show you how I got $360 in like a second, right? And then step 2, you're going to click this yellow button down here, and then you're going to register for the 4 free training videos and a trading pass, and that's going to be $794 in value. So you just go ahead and put your email address and your name in there, click the button, and then you're registered. You'll receive an email with the link to the course and to the drip course that comes out, and then you'll be all set. So that's how that works. Again, it's completely free. It's a 3-day. It's really 4 days of training, and a trading room pass, and so it's a total value of $794. So that's going to be cool for you, and I know you'll enjoy it. And make sure you tell a friend, make sure they register, and just get you excited, get you motivated, and really help you take your trading next level. I appreciate a thumbs up, a share. There'll be room for you to give some comments and some response in the Facebook comment area, and you're going to really enjoy it. And it's quality teaching, and it's going to help you to get to the next highest level in your trading. So that's a gift from me for you. Have a happy Valentine's Day. So make sure you sign up. Okay. See, not only that, there'll be a video for each day. We're going to have strong versus weak, supply and demand analysis, weak strong analysis in currencies. Next, we're going to have candlestick charting, using candlesticks to light up your charts. And the third one, we're going to look at opening range breakout and breaking outside the box. And the 4th video, we're actually going to discuss trader psychology. It's all in your head, and how to overcome that. And each day you're going to have a free gift. Like the first one is going to be a 30-day free trial to my Forex heat map. You just click the free gift below. There'll be free gifts, and each day there'll be a free gift. And so make sure that you attend the class. And then after that, it's we're done. But hopefully, and then if you scroll down to the bottom, there's a place for you to add your comments in the Facebook comments page. There's nothing there because we're just launching this free to you. Again, it's absolutely free. Tell a friend, tell a neighbor, tell an enemy. Make a friend out of an enemy, right? Frenemies, right? And join. All right. So that's that. Make sure you sign up on the sign up page I showed you, and then sign up is right there, and then you'll be able to enroll and get started starting next week. All right. All right. Let's get into the charts. Again, if you just joined us, this is the Pip and Run Market Map, and this is a special Valentine's edition. And again, make sure you sign up for those free workshop foundation videos for the Pip and Run Money Machine. And before we even get started, I want to actually get you into show you the risk disclosure. Make sure you understand all the risks associated with foreign exchange trading before you get started. And just for you who's brand new to me, if you just got this email from a friend, hey, check this out. Well, who's this guy? Well, let me tell you who this guy is. My name is Greg McLeod. I'm the founder of the Elite Traders University. I'm a 21-year trading veteran and trader mentor. I trade options, futures, stocks, and Forex. I'm the foremost authority on short-term day trading and scalping. I did 8 years as a currency analyst and trader coach at one of the world's largest retail Forex companies in the world. And 16 years as an instructor in public education. I worked at a prop trading desk and a top-tier U.S. bank. So I have lots of experience behind the curtain, knowing how they operate their systems, how we enter trades, how we spike the market, all those things that that occur, the little dirty secrets that the institutions play on the retail trader. I know, and guess what? I'm on your side. And they call me the Forex card counter because I can tell you where it's going to go and help you. If you know where the puck is going to go before it gets there, that's why Wayne Gretzky is one of the greatest hockey players of all time, because he wasn't the biggest guy on the ice, he wasn't the strongest guy on the ice, he wasn't even the fastest guy on the ice, but he was the smartest guy on the ice because he could anticipate where the puck was going to go and get there before his opponents. And that's how he was able to be a big scoring leader. All right. So with that, our agenda for today, in this edition of Pip and Run the Market Map, the Money Map, we will look at key levels of support and resistance for majors and gold, and possible scalp entries and targets, and high impact news events that could move the market. So let's go ahead and get into those charts. Okay, now you're probably, there's nothing wrong. Do not adjust your TV set or your screen. There's nothing wrong with it. These lines and bars are actually support and resistance, key support and resistance levels that I look at as far as where price will go next. Now, I use a top-down analysis going from the higher time frame, the larger time frames like the daily, and then dropping down to the smaller time frame. So that's the whole notion behind this, the method to my madness. Okay, so I'm going to start with the Swiss franc. Why? Because it's a dollar pair, and I think the dollar has farther to go. And remember, we were spotting this all the way down since we've been starting this. I said we're going to keep on going, keep on trucking. This yellow line is my 200 simple moving average, and I have it on every chart. Tells me bullishness and bearishness. Bullish above the 200 simple moving average. It also acts as a level of support, and you can see how price hit that level, broke through, and came back up, and it's holding above this 200 simple moving average. Okay. However, we're basically trending down, lower swing highs and lower swing lows. Well, we had a low of around the 98.52 area, and we rallied up to the 1.0066 above parity. But look at this, two little shooting stars there, which is a bearish candlestick pattern, which you'll learn in that video that I'm going to talk to you next week. Okay, this coming week. And this is a bearish reversal candlestick pattern, because this is a full body bullish green candle, and then bam, rejection. I saw a basketball game where this guy was like going up for Carolina, he was going to put the ball in, and then the guy jumps up and knocks the guy ball right out of his hand. Rejected. And that's how the Bulls feel. They think they're going to make it to a new high, yeah, and then bam, rejected, and the candle closes down instead of up. Okay, now let's zoom down to now we've got this rally, so the bulls are trying to rally it up, but this is against the market tide is down. So this is a retracement in a downtrend, so we expect price to go down. Okay, that's what we're looking for. I'm bearish on this pair, especially as long as we can stay below these tweezer tops at 1.0066, right? It's like a double top on lower time frame, dropping down to a 4-hour chart. 240 minutes, all right, make up 4 hours, and we can see price rallying from those lows, hitting that daily support zone, and then rallying up near that 1.066 area, and hit the 200 simple moving average on the 4-hour chart, acting as resistance. So we have a confluence of resistance, 1.0042, and the 200 simple moving average, and it wicked and closed below the 200. So you got some rejection there. So if we get below this 1.0023, look for price to come down to 99.87 and start trending down. So I'm bearish on the dollar Swiss, and I think it's going to go down. If I had my bear button, like Jim Cramer, he's got that bear, I would sell, sell, sell. Okay, I won't do that. It's like, no, don't do that, Greg. Okay, I won't. All right. So, and I probably don't want blue. I want something that's going to show up. Let me edit this and make this a nice bright yellow. Highlight it in yellow, and I'll make that default, so we don't have to keep doing this all the time. Okay, close, and there we go. Again, I'm looking to short this pair, right? And as long as we can stay below, if we can stay below 1.0066, because this thing could come back, flip back up, and bounce. But if it does, I want to sell at 1.042 and look for a move down. Okay, and maybe even down to like that wick. That wick bounced off that level, 0.9969. Okay, so bearish on. So let's go ahead and go. Usually, if I look at the Swiss, I like looking at euro, and if it's here, it'd be cool. Yes, I start off the euro, but I want to start there. And here's the euro. And we'll go back up to a daily chart. Go back to our the 50,000 foot view. We're going to get the aerial view before we drop in and start rattling off some shots. I know Marco is in the room in our Facebook group, Pip and Run group, and he talks about Moss, multiple order series. I call it weapons of mass pipation. Where we just open up trade after trade after trade in the direction of the trend. And just totally, once the market starts coming down on price, we just keep hitting it until it keeps going until it hits support. Now here we have the reverse of what we saw yesterday or last week. Okay. Now what we have here is tweezer bottoms at not really. Now I did a projection target from here, where we bounced off support, and I looked for a projection target 1.618, and we hit that to the pip. Boom, boom, right? Didn't quite get to 1.0587 area, right? So this is a tweezer bottom, and I'm looking for this baby to roar back up because bears have tried to push this down twice and could not. So I'd see a break of that trend line. That trend line comes in around 1.0669. So we can break that. I believe we can go to 1.0773. That's a powerful area. Look how many times that area has been hit. 1, 2, 3, 4, 5, 6, 7, 8, 9. You're out of there, right? It tried 9 days and then dropped. So we expect this to break north and move. As long as we can stay above 1.0587, we look for price to break, buyers to step in, and for this to even go much higher, maybe even toward this 200 moving average, probably 108.50 or so, 1.0874. Okay, so that's what we were looking at, and I believe I'm going to look at the calendar, and we can look at the so we look at maybe the 5th, right? And we look at the 5th, and we can see our price. We had rejection. I said that 1.0773 was going to hold, and if it does, if we don't break out, then we're going to trend down. And we came down very close, about 90% to target, right? Not target the store, but we made a good ways down. Let's go down to a 240-minute chart. and you can see price dropping below the 200 moving average. We can even draw a tighter trend line on this as well and say, look, this is a supply line over the top like that. We can break that, and this low has to hold as support. Price may come down and retest this area or go a little bit lower, but we want to see price to break out of here. Okay, I think we might still have another leg down on Monday, and usually prices go to the next. We went from one daily area, the next daily area is here, and so we might get another shot down to satisfy the pattern, and then there's probably buyers sitting here where buyers go buy it. That's 1.0587. So we might have a little bit more to go, and you can say like I sent some charts out where I showed this. If it breaks this circle, it'll drop, and sure enough, look at that nice bit of pippage there. 1.075720 down to 10602. That's 120 pips right there, guys. So hopefully, you guys have been watching these programs and cashing in on it, or doing whatever you want with it. You can just watch it to keep you company. I know one guy, one of my clients, he says, Greg, I just like hearing your voice. I just play you in the background. I'm not even listening to what you're saying. It's just like you're so entertaining. And it's like, great. However you want to use this, as long as it's helping you, I am so happy it's helping you, right? So very cool indeed. Long distance high five. All right, euro. So I am short term bearish, but longer term bullish. But I think we need to go down some more before we turn around. CAD, we had some really blockbuster CAD economic data, but funky candles. Look at that, dropping. We've been in this bear mode down. I was either looking for a break above. So if we break above, we could go higher. We did not break above, but we went down to the daily support area exactly. All right, I said either one or the other, and we broke two targets, and there we go. That's exactly what we're saying. Now remember, I drew these lines, guys, about 2-3 weeks ago. Okay, about three weeks ago. So I have not added any new lines. These are the same lines. So like really, Greg? It's like, yeah. So once you put them in there once, you don't have to put them in there again, which is very cool. So let me go. That's a daily chart. See, we've got this really weird. Okay, so here's price. This was the news. See, this is the supply line. I said if we got above 31.51, we could move to like 32.40. But we stopped. The news was better than expected. Canadian jobs number was higher than expected, and it was good for the Canadian dollar, bad for the U.S. dollar. We saw this big bar was on news, right? It was a big news bar. So we will see if we would travel right to the 1.3079 area. Almost got down to this line here, the 1.3054 area, but we didn't quite get there. There's old support right there, and price came down and challenged it. And we have our bullish Harami, which is a bullish candlestick reversal candlestick pattern. So we actually could see the dollar actually rally up. We have also doji indecision candle there. We could break the top of that, 1.3092. Okay, and we could probably rally from there. And maybe this is a short rally because remember, I call it manic Mondays. Mondays usually go in the opposite direction, and then Tuesday the real trend sets in. So I usually like fading whatever rally we have on a Monday. Sunday, Monday, there's not enough volume to make the positions go in the correct direction, and then we see some type of reversal. Okay, so I am actually more bearish on this, but I think we are. But short term, I'm bullish. Short term, like a day. After that, I am bearish. Okay, so we can probably see a continuation down, and I can think that after we rebound up to that trend line, that we could drop and retest these lows down to the 1.2959 area. Okay, So again, my short term, well, Greg, I don't get it. Are you bullish? Are you bearish on this, man? I don't understand, man. Yet price doesn't move in a straight line, guy, right? It goes up and it goes down, right? I can say, oh, it's going down, but if I'm getting short here, price retracement takes me out. It doesn't do me any good to be short here, right? I'm taken out. I should have been long. Now this big bar down, Justin, well, I was right. Yeah, you were right, but you were wrong on your entry, right? So you got to look at price. Yes, this is going to go down, but short term, I believe we are going up, okay? And I don't think it's going to last very long. It might not go that high, but this is not the point to get short. What people will do is, okay, I'm bearish. Okay, I'm bearish this. I'm going to get right here. And then this thing is going to, this is like 100 pips, guys. You know, or at least about 30, 40. Yeah, so 40, 50 pips, that's a heck of a stop, right? Are you, I'm right. I know I'm right. I know I'm right. Yeah, but you're wrong in your entry, guy. So you're going to sweat this puppy out. So I'd wait, either buy it to the north side and fade it on the way back down, or just stay out until it bounces and returns, right? So I'm going to go down to an hour chart just to get you going there, right? So we got lots of support there. 1 spot 3119. I love to short against that 200 moving average and hit that baby down to move back down to 1 spot 2992. All right, let me know what you think. All right, you can always email me, greg@elitetradersu.com, and let me know what you think. How's it going for you? All right, let's keep it rolling. And New Zealand dollar, I don't usually cover that. Do I have charts? Yeah, I do. Hey now, this is a pretty chart. Nice upward move. This thing has been very strong. Pull back down to daily support. Remember, these support lines are drawn 3 weeks in advance. So it's like, well, gee, how that's magic, Greg? No, it's price. It's supply and demand. It's buyers and sellers. All right, price coming down to this area. It's 0 spot 765. We have higher swing highs, higher swing lows. This is a profit-taking decline. We expect it to maybe move sideways for a bit, maybe a little bit lower. We do have two harami. A double harami is very bullish. So we look for a break above the high 72.13 for a move back up to the old high. I'm looking for a move back up to 73.80. Okay, 73.80. So that's like 175 pip move to the upside. But I would watch what's going on there. I would wait for price to actually signal that it really wants to move. Let's go ahead and drop it down to a 30-minute chart. And you can see the wider the base, the higher the race. Price is dropping. Bears can't get it to go farther. Inverted head and shoulders. Then we look for price to move back up to the upside. Okay, we can draw a trend line across the top like that. You can get a trigger above 72.05. And you can look to take profit at 72.32. You can trade multiple positions and take profit out at each of these red lines. 72.32 first level resistance, next level 72.56. We break that, look for 72.68, and look for this gap to get this is a big gap fill 73.00 and beyond. So as I'm looking for, we got this base. It's building a base so it can launch up. Okay, that's New Zealand dollar. Let's go ahead and move to, we're moving right through here. Pound versus US dollar, called cable. Let's start off our 50,000 foot view. Again, these lines were drawn a few weeks ago. And so there we go. We got twin dojis, very powerful indecision candlestick pattern where it's a tie. Bulls and bears try to push it down, couldn't do it. Bulls and bears try to push it in either direction, they couldn't. So this is price compression. We expect price explosion, either an explosion to the upside to 126.72 or an explosion to the downside, right? And we could take it back down even through these levels very quickly. 23.80, 23.00, 22.02. Okay, so we will look for and this is indecision. This has been really pressing together really well, and we have made a higher high and higher low. So this is a consolidation in an uptrend. So more likely we'll see a move back toward the 127.00 area, which is about here. And there's lots of layers of resistance for it to really get caught up in, right? But looks like price compression. We do have some UK data coming out that could really send this pair north. Let's drop on down to a 15-minute chart, okay? And you can see that we're in no man's land right now. Ideal trades are when you get close to at or near significant levels of support and resistance, such as the 200 moving average or levels of support. Now, this may come down and test this area to give it like a little springboard, doing like a diving board, boing, 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 and then launch up, right? So it may need to drop first and launch up, or it may have enough strength to push through the 200. But so let's see, maybe have like an inverted head and shoulder. Maybe a Quasimodo, I got like a little humpback of Notre Dame going on here, another shoulder there, and if we can break this trend line across the top, it may be something to look at. I thought I had my yellow chart, but if we can see that line broken, that might be helpful. But again, a break above 25.11 is what you're looking for. 25.11 opens up the door to a lot of good stuff, and for the bulls to get excited about, because there's not much stuff going on until 26.72. Okay, so we'll see. All right, so I am short-term bearish, maybe for a day, but longer term I'm bullish that this will skyrocket. Aussie dollar has been a beast. We had some good data out of Australia, and some probably maybe construed, can be hawkish words coming out of the RBA. But you can see that after we tagged this 76.86 area precisely. Nice pullback, nice spike. I took Aussie Swiss long, and you saw that one exploded to the upside. This looks like a profit-taking decline, and I should start. I'm sorry, I need to start with the 50,000 foot view, start with the daily. I just like jumping around in the short term. But you can see that I had highlighted this earlier. Remember the double bottom in the Australian dollar? That's just bullish. And I said I gave you a trend line, and if we get that break of that trend line, we'll start cutting through these areas of resistance like a knife through butter. And sure enough, boom, hit the line, pull back, boom, hit the line, turn around, wicked up to the other lines, boom, right? And we probably have still a lot more to go. We're currently at 76.86. Look for a move to 0.784. Okay, so look for that bull move to continue, especially a double bullish. Candle to candle on a daily. What is that? Tweezer tops, tweezer bottoms. It's tweezer bottom, bullish, and we're launching. So looks like we're gonna continue this uptrend. Higher swing highs, higher swing lows, breakout. We look for a move that up higher. Okay, let's look at look at a 60-minute chart. Drop it down. You can see we bounced off of this resistance area. Okay, now ideally you'd love to buy at support. 76.55 is this support zone if price comes back to test the breakout point, right? However, if it doesn't get that far, then hey, I look for a break above 76.88. We break that, then it opens the door up to the next level of significant classic resistance, 0.7708. Okay, so and beyond. You want another level? Well, sure, I give you another level. And there you go. You got there's that 77.40 area. Looks tasty too. Because remember, this thing is going to move like the average daily range. The average ATR is probably about maybe like 100 pips. So 100 to 100 to 100, or maybe 50. No, these are 50 pip increments. So we'll probably take out 2 lines a day if it's in an uptrend. So if we broke one, maybe we'll break up to the next one and then break up higher. And okay, so we're bullish Aussie dollar. Okay, I don't cover the exotics unless you put a special request. If you email me at greg@elitetradersu.com, and if you have an exotic you want me to say, hey Greg, how about Aussie Kiwi or something, like, okay, I'll cover that one for you, right? But that's not normally what I do. I will look at I'll look at pound yen, the dragon. That's and I'll look at dollar yen. We'll look at that too. It's like, here we go. And I know my man Pete, he is the Dragon Rider. I've ordained him the Dragon Rider. If you want analysis on the Dragon, he's your man. And EA is another good one. The EA, not Electronic Arts, and it's not Madden 2017, even though it's a fun game. EA stands for the Euro Aussie. Here's the daily chart, pound yen. And wow, I'm seeing a lot of these double dojis. Right now, I was looking for a break. Now, this is where we didn't get to Target. We got to Walmart, didn't get to Target though. But so we got a break, south side break, and came and wicked. This thing came and wicked. Move my circle out of the way. Hello, Mr. Circle. You're gonna go. Okay, bye. And I drew my line there. I said, hey, we can come back and take the kind of a measurement objective of this, kind of like a head and shoulders kind of pattern. Price came down, but hit that support area, daily support. Dang it, got in the way. 38.83. Price whipsaw back, hit the neckline, but look, double doji stop, and it's kind of like a doji haramic pattern where you have a bullish candle. Yay, we're bullish. And then, oh, they fumbled the ball at the 1 yard line. The guy intercepted. Sounds like the Seahawks, right? And it again. Oh wow, we hiked the ball over my head in the end zone, like they happened to Peyton Manning. So you get these where you have momentum killers. Think of these as momentum killers, where everyone's excited and all of a sudden, oh shucks, right? And so usually with this aw shuck event, prices will continue to head back down. So we may actually come and hit this target, but probably not now. But we do want to look at a break below, say, 41.94, 41.84. If we get down below 140.78, look for that big target to come into play, and we could possibly move up. Now, we can validate this. I gave you two scenarios. Well, Greg, it's not fair. You're always right because you always take two sides. I know when I'm right, I know when I'm wrong. I tell you what. If this thing breaks above 42.45, I'm glad to be wrong, because guess what? If I'm wrong, I can flip and get long and double up my position, hit the breaks above these stop runs, and look for a big move back up to the old high, right? And yeah, sure, might lose like 20 pips on that one, but go ahead and make like 75 or 80 or 100 to the upside. Sure, all day long. I mean, it's a 600 pip. But you go back to the old high, it's like 600 pips. 668 pips or something like that. 668. Yeah, I'll take that all day long. Okay. Get good at being wrong and recognizing you're wrong. The faster you can recognize you're wrong, the faster you can do something about it, right? The first step to solving a problem is to know that when you're to admit that you have a problem, that you're wrong, right? So we're hitting this 200 simple moving average, we're hitting the trend line, maybe we drift down, and if we do, look for a price to move back down to, I'm looking at 36.49, so we probably have a little bit more to go on the pound yen. All right, that's the pound yen forecast. And if you want like a day trade, like what's going on, maybe you want to trade like Sunday night, here you go. Ooh, look at that, that's spike. Usually that's a bullish spike, but it's a 5-minute chart. And usually what happens is we have spike. This is a long red candle. Bears are high-fiving each other, and boom, buyers stepped in and bam, smacked it to the upside. And now they're drifting back down again. Buyers smacking this thing again. So we may actually see a price move to the upside. Retest this trend line, this 200 simple moving average, gives us another way to short it again, maybe up higher. Okay, so that's that. Okay. For pound yen. Let's look at the other yen pair, dollar yen. Dollar yen is always a little bit different. It's its own little flavor because it has the dollar. It's a dollar pair, and it's a risk on asset. With, I mean, it can function as risk on for either the dollar or the yen, depending on the news flow. It's a safety play when it can be a safety play for the yen if something's going on geopolitically. They start firing rockets over Japan. Well, guess what? Money is going to probably flow to the United States instead. Or if something's going on here geopolitically, riots or earthquakes or something like that, God forbid, then earthquakes are not fun. I lived in California, and earthquakes were not fun. Okay, but anyway, any types of things like that, you can see the yen actually rally. So it's not a pure risk on, risk off play like Aussie yen or pound yen or euro yen, right? But still, it's a high volume currency pair. And look at that, you got these twin dojis, okay? And it's really, for those of you who know me, I was the chief executive of Astro Lunar Trading, and there is a full moon in Leo, which is usually bullish for the euro and bearish for the US dollar. Don't ask me why. It's like, well, Greg, it sounds like hocus pocus to me. I tell you what, JP Morgan Chase, they are the largest library of astrology related books and financial books related to astrology. And not that I believe in astrology, but if a bunch of people are saying we want to buy the euro when there's a full moon, full blood moon in Leo or something like that, you better be buying the euro, because that's what people are looking at. Okay, so you'll start seeing really jumpy price action around these full moon cycles. And just like the Farmer's Almanac, planting and harvesting in tides. Why? People are made of water. 75% or 80% of your body is water. And so when the moon is full, guess what? Your tides are going to be swishing around and people start acting lunatics. Okay, so we had this lunar period, and look at these funky looking candles. Like, maybe there's a coincidence around. Nah, Greg's making stuff up again. Okay, you'll see. Anyway. Pull back to support, and it's very interesting because it has a bullish tone to it, and BY higher swing highs, higher swing lows. This long wick sell candle, and buyers stepped in, and then we're closing. We're at 113.12 support. If the support holds, look for a spring back to like 113.95. Well, this is like 83 pips. Not bad, right? If we get another candle, a bullish candle, can stay above this, then I'd look for this to move higher. If we break below and knock out 112.84, look for this to come all the way back down, and we can see 111. Okay, this could be an A, B, C, and this could be a 1, 2, and a 3 impulse wave to the downside. And I don't have time to really explain impulses and corrective waves. You go down that rabbit hole of Elliott wave, and you might never come back. So, but it is the DNA of price. All right, so let's look at gold. All right, and hopefully I've covered everything. I want to leave plenty of time to cover the news that can confuse. Right? Hope you guys are enjoying this. Let me know in the chat box that you're enjoying this. Send me an email, reach out to me on Twitter, Greg McLeod Trader, TRADR, and let me know what's going on here. Gold is on the rally. Look at that, 1233, higher swing highs, higher swing lows, and we got kind of a tweezer bottom kind of thing going on there. And to see this large gap thing is that this really funky move here. This bearish candle, this was a bullish candle, and man, bearish just smacked it down, and it was like, oh yeah, well, we're coming back. So we're forming the Valentine's Day, guys. Remember I talked about the heart? It's forming a little paper heart where you cut it in half, and whatever happens on this side when you cut it and you unfold it, it forms a heart. We're forming Valentine's Day heart on gold, just in time for Valentine's Day. I think the market makers are probably like, let's keep making this and go back up. You can't go backward in time to create the little humps in the Valentine's Day, but they can get it back to the old high, especially if we break 1233. Then we can see 1251 quite easily. We can see a $20 move in gold, and especially if the dollars are selling off, we can see 1265 easily. A break above that, 1308, and we'll be in the 1300s before you know it. So gold is a buy. It looks very bullish, but be careful. We are at, this is a daily resistance zone, 1233.89. If we break that, I don't see much, but we see a big giant move. This could like a cup and handle formation. I don't trade those, but it has that kind of a rounding bottom kind of move. Like, yeah, I'm ready to take off, baby. Break up north, 1251 on gold. Okay, so we covered the majors. We did cover the British pound. I know we've got some big news coming out, and we covered the yen pairs. And let's go ahead and just for Marco and the gang and for the guys in the room, I will look at EA. Because EA has been tremendous. Euro Aussie. Aussie's been very strong. Euro has been weak, and we've seen some big moves there. But I do have lines. Okay. I do have, and I haven't updated them, so they're going to be very interesting to see. Wow, this thing, it dropped past all these levels, and I don't think I have any levels left. That's it, guys. No more selling for the Euro Aussie because I've run out of levels. No, there are more. Okay, and I'll show you how I add them. So this gives you a good lesson. I go back, back to October maybe last year, and then I just add these areas here down this horizontal line tool, and then I go back. How far did I go back? And I try to go back as far as I can, and there's still some more stuff to go for. We can actually go now. Now we're in 2010, so basically I'm going back to like 7 years, and now it's just going to take a little bit longer because I've got more data, but I didn't expect it to cover that much territory that quickly, right? But it did, and so I'm just kind of like putting on all the swing highs up to that point, and since we got it all, and it's very interesting that and there's a little bit of support right in here, and maybe some lines in here that need to be filled, like here and here. I'm kind of like eyeballing this kind of loosely. Right there, there's a run little hump right there, and this one that little wick right here. Okay. Now if we were to drop it down, let's drop it down to a 60-minute chart, and then we have our map. Okay. And man, it looks like an ending diagonal to me. And but 3860 was some support there, so we might come down and touch that area. When we broke, this area held pretty solidly, and then we broke, and there was support 3860. And I don't like shorting things once they've extended like this. It looks overextended. I like to see a rebound. And maybe if it can get back to 38 to the breakout point, and actually we have another, I say 39.57. If we can sell it against that area, or even sell it against 40.23, what the 200 is, I want to sell high and buy back low. Okay, so that's that. Okay, so that's the Euro Aussie. That's a freebie there, a little extra one. Now let's go ahead and take a look at what's going on in the news. All right. And then we'll take a look at that and come right back. Okay, traders and traderettes, this is Greg McLeod here. We're going to go into the fundamental, the economic calendar for this week, and we can start with. We basically want to look at there's a lot of news that comes out, a lot of news that confuse, so many different numbers and things like that. And basically, I'm looking at the high impact numbers, or the red. This is Forex Factory. You can go to forexfactory.com. And there's a Japanese yen, GDP. This is the currency will have effect. And this is Sunday, February 12th. We have Japan preliminary GDP expected to rise to 0.3%. That should be good for the currency, and the currency should rally. That means pound yen, the yen pair should go down because the yen is strong. Okay, so if this comes out as a forecast, they actually give you a time, 6:50 p.m. So mark your calendars. That's going to be the first thing up, first impact. On Monday, we have Chinese CPI data year on year. CPI stands for Consumer Price Index, a measure of consumer inflation using a basket of goods and services. And inflation is expected to rise from 2.1% to 2.4%. That should be good for the economy. Inflation shows that there's activity, there's buying pressure, there's demand, and that's usually good for the currency. Now, we don't trade the Chinese currency. The renminbi, or the yuan, has another name. However, regions in the area, trading partners like Australia and New Zealand, their currencies can benefit if this is a bullish event. So we can actually use this 8:30 p.m. news event on Monday to basically trade Aussie and New Zealand. And there's also PPI, which is a producer price year on year, which is actually a wholesale cost of the goods used to manufacture consumer goods. And that's expected to rise from 5.5% to 6.6%. That's a big jump. And that means that China's paying more for goods and services and pulling them in, and the prices are going up. And so that would be pretty good for, I say, Aussie dollar, Kiwi dollar, and the resulting the currencies of that Pacific Rim area. Okay. Now, Tuesday, February 14th, was just Valentine's Day, and a happy Valentine's Day to all of you. We're going to have German preliminary GDP quarter on quarter, and we expect it to rise from 0.2% to 0.5%. And that should give us a nice jolt in the euro if it does come out as forecast. Now, these guys, I know they're high-priced bean counters. They get paid all kinds of money to come up with these figures, but occasionally, if not many times, they are wrong. And I don't know why. But sometimes they're wrong, and maybe they're wrong because they tell them to be wrong. However, sometimes they don't have time to mess with the numbers, and they just release them. And if it does comes up bullish, then we can see the euro rally. Now, next high impact item is that same day, 4:30 a.m. Eastern time, February 14th. We have UK CPI year on year expected to rise from 1.6% to 1.9%. Inflation spreading around the world, and it's kind of like leading to maybe a normalization of interest rates. And interest rates are a big driver of currency, so we could see the British pound rally against the U.S. dollar and against some other partners as well, especially maybe pound Swiss. You might want to check that out. I know we didn't cover that, but you may want to check other currencies which are weak and look at pound and euro as being strong. Okay, and then at 8:30 a.m. we're going to have U.S. PPI, one of the largest economies in the world. USA. PPI month on month, supposed to be flat. And okay, so that might be a non-event, and maybe a reason why euro and Aussie and CAD and New Zealand, the Kiwi can rally against the dollar because there's inflation around the world, but it's not happening in the U.S. So we might not, unless we have inflation, the Fed has no reason to really tighten. So people say we're behind the curve, but you don't want to be ahead of the curve either and crush what growth we have with high interest rates. And core PPI is supposed to come out flat as well. Janet Yellen's going to speak at 10 a.m. So it'll be interesting to see if she is dovish, and if she has a dovish outlook, and she might give us a direction of where rates are going to go in the U.S. And if they basically say, "Hey, we're not going to raise rates," that could really send the other currencies reeling higher. Okay, then you have Fed monetary policy report, and the FOMC member capital is going to speak, so that's going to come out. Now, this is regarded as a minor event, Westpac consumer sentiment, but I've traded that, and that can be pretty good to trade if it comes out better than expected, 0.1%, and we can see the Australian dollar rally on any type of news, new motor vehicle sales as well. Even though I might say it's yellow, Greg, it's not very strong. But I actually like that Westpac thing to trade, news event to trade. Wednesday, the 15th, we'll see lots of UK data. Average earnings index supposed to remain flat, 2.8%. Claimant count change supposed to actually increase from negative 10.1 thousand to 1.1. Okay, so that might put a damper as more people are maybe claiming unemployment. Unemployment rate is supposed to remain steadily below at 4.8%. So if these numbers are not surprising, maybe we have higher wages. That's going to be good for the currency. If we have the lower people on unemployment rolls, that can be good for the currency as well. Now, there's some Canadian data at 8:30 for the 8:30 a.m. news cycle for Wednesday the 15th. But manufacturing sales month on month for Canada expected to fall from 1.5% to 1.4%. If we surprise the upside, these guys are wrong, and they frequently are wrong, then the currency won't do, we expect based on this data that the Canadian dollar would weaken. However, if it comes in better than expected, we could see the CAD actually rally and the dollar fall. This could cause dollar CAD to actually fall. So keep an eye on dollar CAD when this news comes out. And then also right at the same time, guys, get this. The consumer price index month on month for the US. Okay, that's the consumer price index. That's going to measure inflation. This thing of I, they say index. The way I remember it, I means inflation, even though consumer price inflation, right? Inflation, I, and it's supposed to be flat. And the core CPI month on month is supposed to be flat as well. Okay, so if there's no inflation, there's no reason to raise rates, especially if this comes out less than expected. You can really see the dollar sell off. So watch it. Higher the number, usually the higher the currency of the dollar. The lower the number, the lower the currency. Usually, I'm going to put quotes and quotes like the laser, like Dr. Evil. I'm putting quotes around it. Usually, that's what happens. Okay, so but Greg, you said it was going to do that. Yeah, I'm going to say usually. So to let you know that not all the time. Watch price action. Price action is number one. Now, core retail sales is supposed to increase from 0.2 to 0.4. If it disappoints, it comes in less than expected, that could tank the dollar. Okay, so keep an eye on that. And then you have the Empire State Manufacturing Index, and this measures the manufacturing index in New York. And it's like how much manufacturing Trump is trying to get manufacturing to come to the U.S. So, but it's supposed to rise from 6.5 to 7.2, and that could give the dollar a boost if it's strong as well. Now, we have Yellen is going to testify at 10 a.m., and that could be no. She can move the market by blowing her nose. So be careful out there. I'd be flat with the Fed chair speaking because she could move it, and you can't game that. You can't. There's no edge in trading with the Fed. Is a Fed meeting. 10:30 is crude oil inventories. I know we don't trade oil, but Canada is one of the largest suppliers of oil to the U.S. So if we have a lot of oil, expect the CAD to sell off. If we see a decrease in inventories, you could see the Canadian dollar actually rise. Okay, so keep that in mind that Canada is like an oil play. And that's my tip to you. Okay, FOMC member Harker is going to speak at 12:45. If I'm day trading, I'm usually done by noon, so I'm really not really done here. Aussie employment change. That's a big number. Aussie dollar could rally if we create more than 13.5 thousand jobs, and unemployment rate drops from 5.8%, and it drops. That would be very bullish for the Australian dollar, which is already on a run already. So any new good news is just going to keep that baby hopping to the upside, usually. Okay. Thursday, the 16th, building permits, Philly Fed manufacturing and unemployment rate. Building permits, 101.21 million, and the more buildings are made, hey, it means the economy is humming. We can see the dollar move higher. Philly Fed manufacturing index, there's no forecast given. 23.6 was the previous number. Anything higher than that is going to should push the dollar higher. Unemployment claims, they were down last week. This is a weekly number. It's a highly volatile number, and so we could. I don't see a previous number either. Okay, but lower unemployment claims is usually good for the U.S. dollar. Housing starts. It's not high impact, but I still watch it. 1.23 million, and if that increases, then that's good. I'm hearing a lot of stuff in the real estate from my real estate friends that they're like overbuilding and people aren't buying in certain areas, while others are really hot. Some are not. There's a lot of overbuilding going on. So it'd be interesting if we see that number show that we're maybe housing starts have dropped, and that would be negative for the currency. Mortgage delinquencies too, 4.52%, and more people are not paying their mortgages, and that's a new number. I don't remember seeing that, but they're measuring that now. They measure everything now. The number of times the Fed burps it's a number. The dollar could rally on that, right? More gas. Okay. And retail sales in New Zealand, good. That's a big red number. it's a high impact number, 0.9%, and if we see better than 0.9, they don't give forecasts, and that gets usually you want to see the expectation, and you want to kind of like position yourselves. It's kind of hard to position yourself in a forecast, but still you can work with that. Now, finally, on Friday, we have retail sales out of the UK, 4:30 a.m. The previous number was negative 1.9%. No forecasts are given. If they surprise with better retail sales at 4:30 a.m. Eastern Time, look for the UK the pound to rally. Okay. However, if it comes in softer than expected, sometimes if things come up as expected, you might not see a move because it's already priced in. What happens with price moves is because they did not correctly price the pound. So the pound may be overpriced. If it's like 1.8 and they're expecting 1.9, well, guess what? The currency has to drop to match that price. Okay. Or let's say it comes in at 2.0 positive. Well, then, man, it is not. Then we're really undervalued. So then price has to rise to match that new value. So it's all about finding out what this relative value is. So that's the end of the news section. And if you have any questions, again, you can come up to the Pip and Run Facebook group, and we're going to be together until the 18th. So there's a few days left, and also we're going to have video lessons for you, free Pip and Run Money Machine Forex Foundation courses to help you in your trading, to help you in your scalping, and also the Pip and Run trading room. We're going to have passes to that as well. And that's going to be free to you, no cost. Just come up, show up, tell a friend, hey, it's going to be fun. It's a Pip party. I am the Pip Meister, and I love the party with the Pippers, by Pip and Run Nation. And we're going to get ready for a really wonderful event with lots of good information. There's people making all kinds of pips in the Facebook group, and just to make sure that you show up and you sign up. If you have not signed up, you can come into. Hey, I didn't sign up. Sign in, Greg. Hey, here I am. Yeah, we have people, lots of great people who are part of our room. They're making pips. They're posting cool pictures and charts and analysis and music videos. Marco taking it down Euro Pip and Run style in the profit. It's in free fall. I'm smacking up Aussie Swiss. So we've got people just making pips and posting and having a good time. So if you have not become a member, you can go ahead and click that link, sign up, join. It's absolutely free, and it's open to the February 18th. And after that, guys, it's all history. All right. And especially we switch. People are having leaving a certain broker that goes unnamed, and they needed help, and we helped them get set up and help them learn how to trade with a new platform. So we were able to do it together as a family. And if you weren't there, you missed it. I got 2 people who want to join the group. Let's announce these 2 people. All right. Some guy with hey, well, welcome. All right. Hey, from Bangkok. Hey, all over the world, Pip and Run Nation expanding. And then we got hey, from my hometown, Los Angeles, California, Hong Kong. Hey, welcome, dude. Hey, I'm gonna mention you and your lovely bride. I can see you're a member of 466 groups. Wow, you're active, dude. Well, anyway, join our group, and we'll love to see you there.
Hey guys, you want to catch the next big Forex move? Then make sure you stay in touch with us via social media. You can follow me on Twitter, Greg McLeod. That's MCLEOD Trader TRADR on Twitter. You can also join our distribution list at www.elitetradersuniversity.com. You can also join my free Pip and Run group on Facebook. And make sure you check out my YouTube channel for my latest scalping videos, Gregory McLeod Trader. Make sure you give us a like, a thumbs up, and share, and also subscribe. Be a subscriber so you can be alerted of my next videos. You can also connect with me via Instagram, simply Pip and Run. Or you can just reach out to me via email, greg@elitetradersu.com. Look forward to hearing from you, and have a great day. Happy pipping. Cheers.